And hello, traders. How you doing? This is Greg McLeod with Daily FX Plus Education, and I want to welcome you to our webinar presentation of Trading Outside the Box Forex Breakouts. And it's great to be with you here on this wonderful Wednesday, August 7th, 2013, as we explore the opening range breakout strategy. We're going to find out how to enter into the market, how to place protective stops to protect loss, and to how to set targets for entry. Then I'm going to show you a couple of techniques to take advantage of this popular way of entering the market, of playing the breakouts. So before we get started, I want to do a quick sound check and video check just to make sure that you can hear my voice and see my screen clearly, and we can go ahead and get started. And so if you'd be so kind to help me out with a little participation, let me know that you can see my screen and hear my voice. And then we'll go ahead and put the risk disclosure on your screen. Make sure you understand all the risks associated with foreign exchange trading, and also the hypothetical performance disclaimer. Let you know that I'm going to show you some trade setups that do not guarantee any results. Past performance is no indication of future results, and trading forex can result in loss. So trading outside the box, Forex breakouts. And basically we're looking at ranges, very easily to spot type of formations. They look like rectangles, trading the rectangles, looking at support and resistance, but not just any support and resistance. We're looking at support and resistance as it occurs before the U.S. market open. And you can use this for any type of market open, whether it's the U.S. market open or the Tokyo market open or the Sydney market open. What you'll usually find is prices will consolidate ahead of a major market open, the currency market in the case that we're looking at. But also if you're trading stocks will do the same thing. Futures will also consolidate before the market. They will define ranges that will create these price floors and ceilings. So again, range breakout trades are some of the easiest to recognize. You can look at a chart, you see prices in a tight range and a little rectangle going across your screen, and you kind of say, okay, there's like a line of scrimmage. I'm a big football fan. If you're a rugby fan, that line of scrimmage is where the opposing teams line up on the line and seeing who can push who off the line. So we look at that opening range, of that range breakout, as that line of bulls and bears, where they're facing off, deciding where they can go. So traders look for trading opportunities to get long above the level of significant resistance, a price ceiling, or short below a level of support called a floor. Now, we want doing this type of breakout, we're going to be choosing times of high liquidity and high volatility, because we want those support and resistance levels to break. We want to have enough force behind them, these moves, to break out. So we're going to be using that. We're going to be in that overlap period between London and New York for this breakout, because that's when the New York Open it opens. It opens during that 9:30 period. Now we're going to set up that range. And I'll show you how to set that range up by looking at a previous levels of support and resistance. Highs and lows are put in just before 30 minutes before that range is actually established. So we're going to go ahead and to do that. So let's go ahead and move on. Again, some of the benefits of this type of trading is being able to establish a level of risk and a visible level of reward that is quite easily recognized. Okay, now here's an example of a trade I made during the ECB rate announcement, and this was done in April of 2013. And you can see the way we set this up is by what I do. I start with drawing two vertical lines, one at 9 a.m. and one at 9:30 a.m. Eastern time. So I count basically 6 candles or 30 minutes, and I'm looking for the highest high and the lowest low during that 30-minute period. Because during this time period, you're going to have what we call is price discovery. price discovery. I want you to say it with me, price discovery. And this is where the market is testing the floor to see where the buyers are or where the sellers are. And so you'll see prices testing a low, testing the high just before the major move or the breakout, before the opening bell. In this case, we had price being tested down below at 128.25 on the euro, and we had maybe not much of a test of the top side. We can use this previous high, that 28.39. So 28.39, 28.25. That is basically established the high and low of the range. This is this orange box. And what I'll do is I'll extend that box into the future, and we can go ahead and what you'll find is that once that range is established, you'll see prices either stay within that band or break out. And a number of traders, Mark Fisher, George Bryce, there's a number of traders that have told about this strategy, and based on what their research and what their observations have shown, is that 35% of the trading session, 35% of the time, the trading session will make its high or low 30 minutes in the first 30 minutes of the trading session. So either this will be the high of the session or the low of the session. If this were the low of the session, we would see prices continue to move up, and we probably won't revisit these lows where this opening range is for a while. Okay, or this may be the top of the market for the next several hours, where price breaks below this support area and continues down, making this opening range the high of the day. So once we break out, it's been noted that prices usually continue to move and trend higher away from this pre-market range. And so in this case, we did have a breakout, and then price did did move up to an R1 pivot, which is a 1-to-1. So first of all, to look at getting into a particular trade like this, there are a couple of methodologies and a lot of guidelines given, but many times there's not a particular exact way of hitting it. Some people use an ATR breakout. There's ways in which you can just buy maybe an entry, put an entry or a buy stop 3 or 4 pips above the high of that range. So if the range is 28.39, getting in at 28.43 would get you in 4 pips, and that would be your rule of entry. That's one way of getting it. That's an aggressive move. The problem with that move, there's positives and negatives to each of these entry strategies. The entering on the 4 pip breakout above the previous high is you could be subject to whipsaws, and you might have a long wick that gets you into the market and then draws you back into the range. So that would be a negative. However, if you catch the bottom here, you can catch a big run. If the run continues very sharply, then guess what? You got a really good entry. You have your stop just below, maybe 4 pips below the bottom of the range, and you've caught a big line share of the move. Okay. But you do risk the whipsaw. The other way of entry, I know a number of you have talked about this as well, and I talked with Jerry Pan on the forums, one of the members of the forum, and we looked at a pullback. And we get a breakout, and you could wait and be patient and look for this range breakout, this range, pre-market range, this orange area, to act as a floor or a level of support. Because once price breaks out, price usually returns back to the scene of the crime, and we get that double touch of the high. Or if prices break south, we see a touch back of that previous low, a return to the scene of the crime. Much like, maybe you moved out when you went to college and you were on your own, but then you said, hey, I want to go back and live with my parents. You come back and your room is turned into a woman's cave or a man cave or a women's den and a sewing room, and then you have to move out again. So this is like the kid moving away from home and coming back and finding the room already filled, and it just continues and moves on. So we'll see price come back and do that. Now, given that, you can place a stop just below that reversal. You got a nice area of support, and you have a confirmed move that this trend will continue higher. But however, there's always good points and bad points there. Well, you also may miss a move where it doesn't come back to return to the scene of the crime, doesn't come back to retouch the breakout channel, and prices continue to move higher. So again, that's the pros and cons for waiting for that breakout to return back to the area of exit and to enter. The third way of entering this trade is waiting for either two breakouts. Wait for that second breakout. Sometimes you'll have a false wick to the upside, a pullback back to within the channel area, and then prices jump out again, and you will wait for a second move above or below the current opening range. But that also has similar drawbacks to missing the move that totally moves, this barrels forward and doesn't look back, and then you look back and go, oh, I missed that trade. But remember, there's always another tube leaving the station. There's always another train leaving the station house as well, another bus leaving the station. So don't worry, there's always another one. Don't cry over spilled milk. And the important thing is not to chase this once it starts moving up. Okay. Now you can use indicators as well for those false breakouts. They can help you, but there's no guarantees, or there's nothing really that can really protect you from the false breakouts. That's part of the risk of taking this type of trade. Okay, so we basically looked at a couple of ways of entry. We look at taking profit. The first profit, I like trading in 2-unit increments, or taking my trade and dividing in half, taking one trade off profit at the 1-to-1, and then taking out a second at my 2-to-1 risk reward, and moving my stop to break even on the first half of the trade. So that would be one way. So this green box represents a 1-to-1 based on the stop being placed below the range and getting long at the entry above the 4 pips above the high of the range. Okay, so the next arrow would be our maybe like 1.5 to 1, and then there's I use some Fibonacci there to look for some more for another part to the upside. So that's how we can look at taking profit and having our stop just below the range, because the range will either act as support, and if we break and stop out and we break below the range, we might look to a possible reversal. Now I have a trade on right now. We'll see how it's doing, and let's take a look at a real live example for our setup. And here we go. This is our current setup that we have on the euro, and currently is down minus 3.2 pips. We did get a breakout, and let me go ahead and show you the anatomy of the trade, how I set it up, and what I did in order to be able to see the high and the low between 9 o'clock and 9:30. What I did was I created these vertical lines. I just went to the line tool and added a vertical line, and instead of putting it at the 9 o'clock candle, because if the line covers the wick, I'm not going to be able to know how big that how tall that wick is or where that low is. So what I'll do is I'll move my line to the candle before that, make it like the 8:55 candle. Now I'm using a 5-minute chart. I typically use the Euro USD, and the reason being is that it's a very liquid pair. It responds well to stock market moves, have a high correlation to the U.S. stock market open. But you can use Aussie dollar. The cable did a breakout as well. And we can see that I established the low of this candle. Let me see if I can zoom this in nice and big for you, so you can see the anatomy of how I set this up in the very beginning. What I'll do is I'll go ahead and set up. I'll draw a line at 8:55. Look for that 5-minute candle at 9 o'clock, and I would mark my mark my low and just look for where price is trending. And I'm not doing anything. All I'm doing is seeing price discovery. We can see price coming back down, testing this one spot 3294 area, which we tested back here. Then price rallied up, and again, I'm not taking any trades. You might even see prices. This was a big blue candle, and you say, "Oh, it's breaking out right now." Usually, these are just, again, price discovery The market's trying to find out where the buyers are, where the sellers are, and establishing that range, that high and low. So we got that spike right there at 9:30, and we came down 9:35. So I just moved that over. So that is where my range is defined by these candles, 6 candles, 30 minutes, 1, 2, 3, 4, 5. Oh, that's my 9 o'clock candle right there. I'm gonna move my thing right there. Actually, let me just leave it right there so you can see the size of the candle. You can notice the wick. You can appreciate the size and the wick showing that support area, which I have highlighted by this purple, no, my colors there, purple rectangle there. We see support coming in right there. We see the bounce, and right there the tag, and then we just moved sideways. Now here we had, if we took a break, then this would be a false breakout. We had a long wick there, and another way of entering is waiting for a full body candle close and looking for price to we have a closing candle like we had here. We had a closing candle. This candle closed above this area here, and so I would have used a market order to look for that candle to close. The moment the candle closed, I got long, and I was up a few pips, and now we're kind of drifting back down on top of the range there. So what you'll also find as well is at about 10 a.m., about 3 p.m. GMT, you'll see the European close, the European markets closing, and you'll see big moves in the market as well. Now, we see this pullback, and sometimes we'll drift back into the range and just kind of lackluster. Now, we had some big moves in the euro. We had some good economic data, and we saw the euro move very strong along with the British pound because of a hawkish inflation report from the Bank of England that was released this morning. And so we did have a lot of the ATR was already pretty much eaten up here in this big move. We had a big move south, a big move back up, and sometimes we have a period of consolidation after big news announcements or big volatile moves. So the market is basically catching its breath in this range. And so after it maybe consolidates for a little bit, we may get a resumption of our up move. Now, the addition, you can just, at first I just use just the price itself. Price is my indicator number one. Because remember, all indicators, whether they're oscillators or MACD crosses or other things, they're just derivatives of price. And we want to be as close to price as possible. However, these can give us a clue of the bullishness of a pair. We see that on this 5-minute chart, we do have the RSI above 50. And we did have this dip in this wick, and RSI came down below it as well. But we didn't close. So we kind of drifted up. We got a nice little breakout here at the 10:15 candle, probably as a result of maybe position squaring as European traders are heading home, heading to the pubs for the day. We see maybe their orders, they're closing out their orders, closing out their sells with buys, and just we see that kind of momentary move there. So right now we're just hovering, but you can see that I established this. If you just move this back in time, this is where this is all I had. This is all we have during this opening range breakout. We just have those 6 candles, and we just established our range based on that box. Then we just move that box out and project that congestion zone, that price discovery zone out into the future, looking for the breakout. And we did, and look, price held that area. So even though the market doesn't know where this dotted line, oh, Greg drew a green dotted line there, I think I should stop and sit there. No, I'm not the only rocket scientist looking at this, and so a number of traders are looking at this, and so that's why we're seeing this support area actually holding, because these things only work, they're self-fulfilling prophecies. They only work if other people are looking at it And if we're drawing a line which no one else recognizes, then we have a problem. And I see Howard in there. Thanks. And the guest, thanks so much. I appreciate it. Says, congratulations, Greg. Your audio is not cutting out. Man, great achievement. That is a thumbs up. Thank you so much. I really appreciate that. Nito, hello, Greg. When setting a limit order at certain levels, fibs, and let me finish your question. Nito, hey, Nito. Hello, Greg. When setting a limit order at a certain level, fib, pivot, etc., do you set that limit a little short of that level? Thanks. Yes, I do. Sometimes I like to, what I'll do is let me put my daily pivots I like using on my chart, and let's go ahead and put those on. Daily classic pivots with ends on both sides, and I also use the midpoint lines as well. So I just choose the standard pivots there. And you're going to have to scrunch them up a little bit. I'm going to scrunch this price up because you won't be able to see the end. But you can see I did set a limit right there at the R1. Actually, I have it on R1. But usually I might have it a pip or two below that. Hey, Han, good morning. Nice to see you in the room. And yeah, I'll have that because you want to. If other people are setting limits in that area, you might want to get out a little bit early. So I can just grab I can trade from the chart, go ahead and grab my entry limit order and just bring it back a little bit. The pivot is like 1 spot 3336, and maybe I can pull it down to like 34. Okay, and see if we get a little move up there. Now that's my 1-to-1 price target, the green box. So I'm going to take off half my position at that green box. Now I do have a more ambitious target, that 3350. And so if we can get up to that, I'll bring my stop from. See, I have a stop down here just below the wick and this the range. And so I'll move that stop. I'll just drag that up to break even on that second lot and see if we can get the rest. So we get stops and targets. Great question. I use the range itself as my stop. And now if I get a wick or something that comes below, sometimes I'll do is I'll put a couple of pips between me and those and that wick. So actually that wick low, and I might have that a little wide there. I might want to tighten that up a little bit. But the low of that candle that penetrated the wick, that penetrated the range, the low is 1 spot 3289, and I have my stop at 1 spot 3285. So that's about 4 pips below the low. And that way, if case price comes back down, test this area, I'm behind these guys, right? You know, you ever like say, yeah, you want to pick on me? Well, pick on my friend that's bigger than me. I'm going to get behind the big guy. So I saw a lot of selling, a lot of buying pressure came in here at this 90 area. More buying pressure came here. So I'm going to step behind these guys and use them as like a shield there, you know. So when price comes back down, you got to deal with these guys first and have my stop behind there. However, if price gets past those two big guys, then I'm going to cut and run too. I don't want to be the last one holding the bag, the hot potato there. So I like placing my stops below areas. This area was a significant area of support. The penetration and the rebound also is an area of buying as well, which I'll use as a shield. So you have to customize it. That's for me. That's what I do. Or you can just be a purist and just put it right there at that area. But I just find that prices may come back down and tag that area, retest it. And if it's too tight on the range, you get stopped out, and then prices moving up in your favor. Okay, so good question. So again, my stop is the range itself, this orange box. My limit is the height of that orange box. So if I take that and you probably can't see that, but let me measure that. It's about 20 pips. So my 1-to-1 target takes me I have a target right there, 18 pips right there, and then I look for another 17 or 18 right there. Okay, so in fact, I could just create another box to show you that other target that I have going as well. And green means, well, the money is a little light green, but I'll use this other green here. And so that's my other price target as well. So, so again, I take the range. That is my stop, and then I try to use a 1-to-1 for half my trade, and then the other half let it go to break even as a stop, and then look to try to get that 2-to-1 target that's just above. So I hope that's clear. Any good questions? Okay, and Dave has a question. And again, thank you for your questions. Keep them coming. This is when taking a breakout, will you take it in either direction, or do you have a technical directional bias when only you take the break in the direction, ignoring opposite directional breakout signals? I usually just go for the breakout and just look for something like right now. There's a upward bias currently, but we're also. I'm looking. We're at the pivots. We're at R1. Okay. Sometimes R1 is like sometimes currency pairs will stop at R1. Typical range for a pair is like from S1 to R1 or S2 to R2. So I know that maybe my upside may be limited here. I've seen prices break out to R2, R3, R15, R19's mama. It can keep going higher and higher. So I'm I'm kind of watchful. That's why I have this double target. If we do get past this R1, old resistance becomes new support, and then we look for price to continue to move higher. And so typically, if we are R1, if price does respect this area and does turn around, we could get a false breakout or a breakout part way. Then price comes back down, breaks through the trend line, through the range, and comes back through the bottom side of this and makes a nice short trade to enter on the short. So I'll play both sides of the range. And Howard asks, will this be archived? Yes, indeed, he most certainly will. You'll be able to watch it as often as you want. You can even, if you miss any part of it, I believe there's a scroll bar which you can, like a TiVo, you can scroll back and rewind something that you missed. Okay, so let me move this over as well. So here we go. We're at one spot 3315, and we're just kind of sitting right here at this area. Sometimes you get a breakout and it just goes right to your limits, wham bam, and you're in, you're out, and you're done, and that's a great trade. Sometimes we drift and drift and drift, maybe to like 2 p.m. Eastern time. That's about 7 o'clock UK time. So we get that sideways drift, and then all of a sudden we get this last minute push later on in the afternoon. Okay, so that is something that we can, we're just staying above this area of this top of this range. We're just holding that. So we either hit it right away, or we just can continue sideways. Sometimes I'll see, maybe I'll move at 3 p.m. Eastern time, which is very very late. You'll see it'll just, maybe the price will stay above this range or within this range, and then just start moving toward the end, almost like it's just a marathon wearing people out. Nito, how you doing? You got to miss the limit on Euro and by 2 pips after later lost out. Live and learn. Oh yeah, I feel you. I had a short on cable. You probably followed me on Twitter. I got short 153.10. I was looking for like 151 and moved myself to break even. Was up 100 pips on that long wick. Let me take a look at that. It's painful to look at that, but you know what? Stops work. I want to tell you something. Stops do work. And where is okay? So that wick there, okay. So, and that was like early this morning. I got short, and then we got this nice big drop, this huge drop. High fiving my trading partner and friend Walker England. Yes, Carney's speaking. Bank of England inflation report, and then bam, turn around to the upside. Bam, I am stopped out, and not happy. So, but guess what? If I was still in this trade and still short, I would not be. I would be very, very unhappy at this point. Okay. So remember, the best laid plans. We had consolidation. We had a breakout of a range. I mean, this was like the range breakout, the mother of all range breakouts. We had this range breakout here. Little small one coming into in the European Frankfurt Open. Now this is the. So here we go. About 3:30, we got the. This is about the Frankfurt London Open. We got a break south side, and then this big move here. And let's take a ruler on that and take a price project. I mean, about 90, 92 pips on that move. And so it was very quick. I mean, this is a 15-minute candle, and you go down to a 5-minute candle. You even go to a 1-minute candle. And let me just size that up. And just look how fast. I mean, each candle is 1 minute. This baby is flying. And look at that. That's a 1-minute candle, 52.88. And BOE Governor Carney was giving his inflation report. And there you go. This was a 1-minute candle, and it just moved. And let's take a. So we moved 88 pips in 1 minute. No, 90 pips in 1 minute, and then the reversal. And there's a wicked reversal there. But there's your range, and there's your break. And then actually, let's look at the analysis of this breakout. Prices came and broke out south, came back and retested the inside of the range, and then we got a nice drop. So we actually had a lot of opportunity. 1, 2, 3, 4, 5. There's your 5-minute close outside of the support. We saw the return to the scene of the crime. We saw this retest, a comeback, one last push higher, and then the major drop. And very sweet indeed, if you were able to get out in time. Okay, so let's get back where we are. Here we go. This is we're again our opening range breakout here for those people who are just tuning in. Got long here, and I got long at the one spot 3318, and we got this breakout topside, fast move, pull back, return to the scene of the crime, and now we're about 2.8 pips. So let's see if we get some price acceleration. We got RSI above the 50. And it looks like we're picking up a little bit of speed after the close of the European bourses. And you can see I can see 12 pairs on my screen. Opening range on all 12 pairs. Why do you normally just look for euro? I'm like a one-track pony. I only need one win. I don't monitor all. I try to be. I'm like Kentucky Fried Chicken. I specialize in chicken. Over here we have the Colonel Sanders, and I'm sure you have it around the world too. They don't have burgers. They don't have tacos. They just have chicken. And so the opening range breakout, I just do euro. Euro is my chicken. So, however, if nothing's going on, I'll look around. But I find out that if I can grab 36 pips or 18 pips here on this opening range repeatedly in a regular manner, I have a system. And if I have a system, then I've got a business. And if I got a business, then I'm making money. And so that's basically what you want to do. If you can find something that can repeatedly give you a regular profit, that's fine. Now I'm going to get stopped out. I've seen the whipsaws, And you get, especially if we get around major news announcements, sometimes you get a big whipsaw wick to the top side, big whipsaw back to the south side, and you're negative on the day. But here I can identify the euro, and I know that this is going to break out. But if you see others, feel free. We saw some on Aussie dollar, the pound yen, and normally if I'm trading at home, if I have four or five screens at home, I'll have that. I'll have multiple pairs up, and I'll actually set alarms. I might not necessarily have entry orders there, because I like actually executing the trade myself. But I know people that actually will they'll put their entry orders in and their stop orders in and just walk away. And that's another level of it's what you feel comfortable with. But it also takes a lot of the emotion out of it, a lot of the guesswork out of it. And so if you can discipline yourself or get to a point where you're able to just set your limits and walk away, that takes a lot of stress out of your trading and makes it more mechanical, makes it more regular, and you got a business. Dave, good questions. And Ihan, excellent questions. Would you consider taking an upside break when it returns? That's a good question. Dave says, would you consider taking an upside break then if it returns and break out to the downside, taking that also? Yes, I would definitely look at something like that because it would meet my rules where prices, I get a close outside of the range, then I get long, and I'm staying with the trade. Now, once I'm up and I hit my first target, I'm going to bring that stop in that second half to break even. Now, hopefully, we'll be able to break out of this range here. We'll break this new high, and we'll go ahead and limit out and get some winter chicken dinner. Lately, we've been doing a little top ramen and noodles right now, so let's go ahead and see if we get a breakout and we can get lobster dinner here. So we're up, touching that one spot 3326. That was a high we saw back at 10:15, and we're coming up on that level right now as we are closing in one spot 3325, and we're challenging that topside resistance level as we narrow in, and we see prices. I guess some other traders want some chicken dinner out there too. So we'll see if we can. We're up 4.9 pips, 4.8 pips, and looking for that break. And we believe that there's probably stops above this area, and we may get some type of a stop run, which would carry this into some of a little short squeeze rally. But again, all that's conjecture. We don't know for sure, but just let price tell us where it wants to go. And I'll keep answer your questions while we're looking at price action. And T-Tops, congratulations, high five, long distance high five. You picked up 112 pips long on that pound dollar. Big congratulations to you. And that pound dollar was guess who's buying dinner? T-Tops. Nice. Congratulations on that. And Han, very good, very good. I know that you use RSI. Do you use this to initiate entry? No. Basically, I'm just kind of looking at it either to stay above 50 to give me an indication that we're bullish, or if it goes above 70 and comes back down, we can determine that maybe we're going to come down. And so basically, it's like when you're driving down the street, you got your tachometer, and you're seeing how fast your engine is going. And right now, we're above 50, so it's telling me that, hey, this little engine's got a little bit of, a little go in it, and we keep looking at this to the long side. Okay, so we're up 6 pips on this particular trade. Again, one spot 3326, looking at the break of a high at our 10:15 high that we made. That we're looking at. That high was one spot 3327. So we need 2.8. If we get 2.8, we could probably see a nice roll into this area of resistance up here where our limit is set. We have a limit set at one spot 3334 to take half our trade off, just short of this R1 pivot, one spot 3336. Now, another entry or a technique for the opening range breakout, which is not really a breakout, is actually fading the opening range. And usually you'll see during Asia, you'll be able to use this on European currencies. because the European markets are closed. There's not a lot of news that affects the European currencies. There's not a lot of trade volume during that Asia session. So when you have these ranges, sometimes you won't get the breakout, but what you'll do is you'll see price rallying up to the high of the range, and then you look to fade that move. And in trading, what we mean by fading is taking a position in the market opposite direction price is going. So if price is going up toward resistance, if we wanted to fade that move, we would get short at that resistance area with a stop above the high and look for prices to return back. So if prices are moving up toward our top of our range, we're shorting and we're looking for price to return back to that. So we're actually fading the breakout. Now, in an active market like the U.S., where you have this U.S., New York, and London European overlap, you have a lot of volume. About 85% of the volume is going through, and so fading the moves may not be a wise choice during this a highly liquid time. But during Asia, looking to fade the moves and using your RSI as RSI crosses above 70 and comes back down, that can be very useful. Another indicator that Linda Ratschke has talked about. Linda Ratschke is one of the market wizards, and she uses the ADX indicator, which you can use for range. And let me show you that indicator here. The ADX, the average directional range, determines the strength of the prevailing trend. And it's an oscillator. And what it does, and I don't like that ugly little sand color it comes in. Let's use a nice blue and click OK. And make it a little wider so you can be able to see that indicator. Click OK. Now, see ADX. Now the other indicator that usually goes on top of is that DI minus and DI plus, and let me see if that's in here. DMI, yes, and let me click OK. And location, I want to put it on top of the put it right here, and click OK. There we go. So we have the DI plus, that's light blue, and the DI minus is red. And the darker line, we want to see in a range that it stays below 25. And usually means that we're ranging. Now, this is not particularly healthy for our particular trade, because on a breakout, we would love to see this ADX, this trend strength, to be above 25, to be 30, 40, 50, for us to get that extra momentum. So we see it in 23 is actually in a range. So this is an indicator we would possibly use. Now you can see in this case where we have a nice big breakout here, lots of blue candles, breakout on the news. We had that European news. We had the factory orders. Actually, it was the it was a French trade balance earlier in the session, and then we had another number as well. And let me bring that up. German industrial production. Okay, I know it was like there was a big number. It was 2.4%, and so we got a big pop on that move at 6 a.m. But look at the ADX indicator. ADX above that 25 zone, above, and so we were in a range, and then we broke out, and then now we're kind of moving sideways. So that's an additional filter that you could possibly use. And looking for a breakout is looking for that number, this blue line, to get above and stay above 25, moving toward maybe 30, 40, 50, or 60. Right now, it's actually just chopping around below 25. And so notice how we're not really making new highs when we're just kind of sitting around. I have seen prices break out even though the ADX indicator is below 25. So we'll go ahead and see if that is, we can see that move continue and move higher. So again, 133.21. We're still up 2.9 pips, kind of like watching paint dry, but we're still looking at this. We're still bullish above this top of this range of 1.3315. Again, if you have any questions, comments, let's go ahead and uh, maybe look at some other pairs you want to look at, and maybe look at the opening range as well. T-Tops, hey, you're quite welcome. Howard, Greg, if you are Greg, okay, Howard writes, Greg, if you're long slide short the euro dollar, would you then also take another dollar-based pair, for example, pound dollar, if there was dollar weakness and euro strength, or would you choose a yen pair or Aussie cross? Well, sometimes you'll see, like in the case of the euro dollar, you'll see the sometimes they'll track each other like we have now, which we have a bullish move in the pound, bullish move in the euro, and so basically you're going to be doubling up your exposure. So if you want to diversify away from a dollar pair, then maybe looking at a yen cross and maybe an Aussie yen, maybe a euro, maybe like an Aussie Kiwi or something like that. Like we have Aussie Kiwi breaking out southbound as well. And if we can see that, we have a nice move. We rallied up to a level of previous resistance, and now we're heading back down. And so if we were to maybe look for something on that, might not be so sensitive to the opening range, and, but in fact, let's take a look. This is, so if you want to diversify, we're at Aussie Kiwi. We're not in any dollar or European pair. And so we can set up our opening range. And let me show you how to possibly do that. We've got our 830 candle. We can go all the way out, and let's see if it actually worked. I have not done it with this pair. Okay, so I'm actually going to put here at the, we're looking at 30 minutes before, so like 9 o'clock. And looks like our 9 o'clock candle was here, and our 9:30 candle was way down here. So very wide range there. So that didn't necessarily would have worked out, because we would like to see as a range established beforehand. In fact, prices actually channeled before. We did have a nice established support and resistance beforehand. And it can be something quirky with the particularly the currency pair, which maybe if you study it, maybe it does it over several days, that it has repeated this pattern where it actually forms its range at 9 o'clock. Okay, so maybe 9 o'clock, 8 o'clock, 9 o'clock, we form our range first and then get our breakout. And that's a nice, beautiful breakout. I mean, if we were to take that low, we got a fake breakout there. We didn't close below there. We rallied up. We didn't come up to the top side of the range, 1.31. Nice doji candle. You had this candle close below. You could have gone and get a cup of coffee, come back, and still been able to get short this pair. Your stop could have been above this area. Let's see what your stop would be if you had a stop on the other side. And we maybe add 4 pips to the top side. It makes us about like 20. And so we have a 14 pip stop. A 14 pip stop. And look at that. And look where we have moved. We've moved quite a ways from that. And let's say we've got a bad fill right here at 130. We dropped 33 pips, so you got your 2-to-1 right there off that move, and then some before we got a retrace. So there you go. Aussie Kiwi did range beforehand, and then you could probably scroll back to see if maybe we did have some type of a consolidation before a move, and that maybe another ranging pair like our friend. He was saying there was 12 pairs that were ranging and breaking out. That was Han, and thanks Han for pointing that out. That if you're looking at other pairs that are more promising, you can also do that. Look for that consolidation and look for that break just before our market open. And it seems like the Aussie Kiwi went a little bit earlier than thought. Let's go back to our trade. And we're still here, 3.9 pips. We're hanging on there. It's better than a sharp stick in the eye, as old course instructor used to say. But we're up about 3.8 pips, and we're still holding this level. And Johan, how you doing? What you got to say? Johan says, are you using an app to color code the ranges? I've got a box of crayons. No, I don't. I'm a sucker for colors and shapes, and so what I do is I go up to this. I also love MarketScope because I love they have the color ranges. You can go up here, and you can just create a rectangle like that, and you can change the color. You get a whole palette of colors. You can do purple or magenta. It's not pink. It's magenta. Or dark. Maybe dark blue won't show up. I just kind of keep it like a green means go and red means stop and orange kind of neutral. But you can just color in yourself. Be nice if something would do that. Something automatically could do that. Maybe that might be an idea for an app for the FXCM App Store, Johan. But yeah, I drew the in that little purple boxes. I drew them myself. Yeah. Hen, do you also use opening range for long-term strategies like the London Open? Yeah, I showed you that London Open, which was a pretty neat trade on the pound dollar, which I took this morning and walked away with a stop. But if I were there to kind of watch it, and then I would have had that limit set. I basically thought it was going to be a long-term trade, and that the stop made that saved me. I can keep a positive spin on it, but it saved me from losing a lot more pips. And that's how you view a stop loss. Can't look at it as regret, but look at it as it saved my account, and it was a great job. The stop did what it was supposed to do, and the platform did what it was supposed to do. Thank God for the stop. Okay. And let's see. We got a lot of questions. You guys are really active. Sorry, could you cover that again? Train both sides of the breakout in either way, Dave. Yeah. What I'm looking for is once I establish that range, I'm basically looking for a candle close. Like there's 3 entries that you can use. You can wait for a candle, 5-minute candle close above or below a support resistance area. That's one area. Or you can look at in the entry order. You can use a buy stop or an entry order in this case above, maybe 4 pips above, and have it do it automatically. And it lets you get you in. Or you can wait for a retest. Like for instance, we could have easily said, "Hey, you know what? I'm not going to buy this on the breakout because there's so many whipsaws going on during the summertime trading." And look, it came up, and you're like, "Oh man, I missed the move." It came right back down and gave you another place to get in. And now you've got a failure swing where price tries to make a new low. The bears try to fade this move, and they fail to. So we have a failure swing. And the failure swing is when bears fail to make a new low. They're trying to push prices back down to this area. They were unable to. When you see failure, when you see one side failing, that's when you want to look at pouncing in the market. When one side, if you're a bull and you see the bears failing, you take advantage of their weakness and take position. If you're a bear and you see the bulls failing to push up, then you look to take advantage of their weakness by attacking that failure swing. Again, failure swing is just an elbow. Just bend your arm and put your hand on your elbow. That's a failure swing. And it's a good thing because you wouldn't want to have your arms hanging down to your feet, right? So that bend, and there we go. We got a breakout above the high. We're at one spot, 3329, and there you go. You see that big run up. We know we're clearing some stops out because prices are moving up. Let's see if we can get some follow through into our limit here that we have set at one spot, 3334. And there you go, a little bit of fade back to the south side. Okay, let's see if the bulls can mount another attack. Look at ADX though, down below 25. Maybe we get above 25. We could probably see this engine kick into overdrive and take out our limit there. Okay, and more questions. Hey, Howard, Greg, if you're long and you hit your targets, would you then go home? No, he said. Oh no. Would you then take a counter trend reversal? The old saying in the market: bears get fed, bulls get fed, but pigs get slaughtered. There is an area here though, that 133.50. That I think if we close above that, we're probably going to run to 134. There's air gap. You guys talk about my air gap strategy where when you got a big downward downdraft move. Prices come back in to fill the gap, and so and okay, I'll take a I'll show it to you. It's just 1 minute of time left, and so many questions, guys. You guys are great, fantastic, and it's so great to be with you here on the Daily Effects course. But here's that big move down, and you can't see that candle. Let me stretch that out there, but that's a big body candle. I mean, we went from one spot 3414 and basically didn't find any support till we got back into this 1322. Now we've just retraced all of that, and I believe in the rule of symmetry. A guideline of symmetry is not really a rule, but what happens on one side of the equation, we got that big drop on the south side or on this side of the chart, and we look for a symmetrical rise in pips equal to that area on the other side. So I'm looking for that gap to get filled on the other side. So we got a little symmetry. And there we go. We're up 10.6 pips. We did take out that high, and now we're moving higher. One spot 3329, and we do have the ADX crossing above the 25 area. Currently, the ADX is at 27.93, and looks like we get a little bit of a stall. But let's see if we come back. This was our high, and tag that. Came back to test the scene of the crime, and again we've let's see if we can get so close. We're at one spot 3334. That's going to take half my position off. That's my 1-to-1 risk reward there. And remember, you can if you can get 1-to-1s, you can win 50% of the time, and you can still be in the game. Okay. Now I've got a 2-to-1 too. I'm going to get the best of both worlds. If we can hit here, I'm going to bring that stop that I had down here. I'm going to bring that stop to break even, and look for prices to, I don't know, try for that 2-to-1 target. So hopefully we can hit that area. And I'm going to keep answering your questions as long as you're here. I do have to go over to Analysts on Demand, where I'll be talking more about the markets. So make sure you be part of our elite group of traders who are part of Analysts on Demand. And you say. Hannah asks, or what about reverse breakout strategy? Because all I hear about is false breakouts. Well, then when we get these false breakouts, hadn't seen one here, but then we would look at, let's say we got back down below this range, and maybe you haven't taken a trade. Maybe you say, you know what, Greg, I'm just watching this. I'm not sure what I want to do, and you really haven't pulled the trigger on a trade. And you see that price comes back down below 133.15. That may be something for you to look at, perhaps. Okay, that may be something to look at. But again, the breakout strategies, there's risk involved. And in fact, you may take a lot of trades. A lot of people talk about the turtles and their strategy and things like that, but they took a lot of losses of false breakouts. But the thing is, they have a mechanical system where they took every single trade that they made. And Mark Douglas talks about in his book, The Disciplined Trader and Trading in the Zone, where there's an example where if you had a machine that would pay you 2-to-1, but you had to take the trade, you'll get paid 2-to-1 on your trade, but you have to take every trade, or you have to pull the handle every single time. Okay, and you have to keep feeding that thing money. Can you survive 50, 60, 70 losing trades in a row? Before we actually come back to the upside. Okay. So we're going to go ahead and close out right now, and I want to thank you for being with me for this webinar. We have David Song coming up doing a Q&A, and he's going to come up next. So I want to thank you for being with me today. If you have any more questions, come out to the Daily FX forums, and let me give you my you can look at some of my sample strategies and contact me in the forums, and that way I can clear the room out and let David go ahead and have this channel. Again, stay tuned for his great presentation. It's great being with you. Have a great day, and take care. Cheers.